Good evening. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening of Wednesday, and we're at the 22nd of March, 2023. So we got through today a series of events. I think Fed Chair Powell did a great job, by the way. I don't think he got off the page, so to speak. He stayed to his script. He said that the Fed's mandate is to fight inflation and drive it back down, and he wants it to go to 2%. The pace that it's falling in regular inflation, he likes that it's falling, but it's not fast enough. Number two, asked about the banking situation, he said that banks are good on an overall basis. There are a few problem ones, and I think he alluded very nicely to understanding this bank didn't take care of its risk. And there's a couple of them that didn't. We've got probably 3-4 banks right now that are, in my mind, you had the Sovereign Bank, you had SVB, we've got First Republic right now having a problem. PacWest all of a sudden showed up today. But as he was talking, he alluded to the fact that he thinks that what this has done, all these banking problems, it'll make the bank lending standards much tighter. And that tightness will cause the equivalent of another rate hike. When asked about rate hikes and that, he thinks that, there'll probably be one after this, but it'll be data dependent. But he does think that we've got one coming because of bank tightness. When asked about depositors and the safety of their deposit, at first he made it sound like depositors are safe. Well, they're not. Depositors have in America, unless the FDIC, the Treasury Secretary, and the Fed go in together, they have rules that they can go bank by bank to do certain things, but they don't have blanket authority, and they can't get it because that's a congressional act to raise FDIC insurance. Miss Yellen, at the end of the day, after his part, was asked what she's doing. She says it's not even being discussed. Well, when she said that, the stock market took off to the downside because these banks have a lot of problems. And these are only the ones you know of and I know of right now. There's probably more lurking out there. And my big fear is the commercial end of the real estate market. As loans come due, how can you as a bank turn to this landlord that's got a B or a C building that's pretty empty and he wants to renew his loan? What's the value of that? It's got to be down a lot. You got to haircut it. Is it worth lending money on? I don't know. But what happens to the loan that's on your books? You're calling it in. What if you can't pay it? Lots of problems taking place there. That's where I think the next shoe to drop will come out of. We'll see how bad it is and if I'm right. But now we've got to step back, and what does this all mean? In its own way, it takes away a headwind of higher interest rates, dramatically higher. The Fed sounded as though it could be one more and the pause is there. It sounded that way to me, at least, because they also want to see the time factor. They are concerned that the labor isn't falling on the service sector, and that has been stubbornly strong, and it's staying that way. They don't see how they can stop that right now, and I think they're right. I have mentioned to you come spring and summer, no. I can see the fall, it all happening. We live in the North American continent. It gets cold here. Yes, I know we got parts of California that are gorgeous in Florida, but there's the rest of us, and it gets exceptionally cold, and outdoor events don't take place, all right? You don't have enough skiers to make up for the golf people you have to hire, the outdoor restaurants, the lawn people. I can go on, and that's going to keep certain elements strong. And you got to think that through. So I think that that's where their problem is. But the reason tonight bonds and notes are at least up temporarily, I think is because they're realizing the headwinds have disappeared in a big way. They've already probably accomplished 90% or more of where they're going. And in the back end, they may have peaked out in their high rate. We saw mortgages come down today to around 6.4, 6.5%. We're going to get new home sales coming out now right behind this. So we got a lot of data that we're going to do. Tomorrow we get two more banks. We get the Swiss National Bank decision. I think they'll go 50 basis points to measure up to the ECB. And as much as the Bank of England doesn't want to raise rates, I don't see that they have a choice in any manner. Their inflation numbers went up today, and I think they got to go up another quarter point. As much as they don't want to do it, I think they'll be dragged along. Now, when you look at First Republic, down 15% today. Now, these numbers are, you're down $2. It's not like a lot of money, but because the stock is so cheap, it's there. It hasn't gotten away, in my mind, from a stock that can still become a big problem called worthless. Be careful. When you take a look, the trend is down. You got lower highs, lower lows. You're well under all the key moving averages. The Bollinger Band now is a negative 17. So I don't know what the number is that it'll go to, but it can't be the Bollinger Band. The stock can't go under zero. The math of the Bollinger Band can, but not the actuality of it, and you have an embedded reading. Until that red line closes over 21, I think this just leaks and leaks and leaks unless a white knight shows up somewhere, and that's always a possibility. Barring that, this thing leaks and leaks and leaks until it gets taken over in some manner. So that's what I think will be. All right, let's keep going. What about Schwab? It didn't get any bounce here, none at all. You're just hanging here. Here's a big brokerage company, not doing very much. I'm wondering what is going on. Traders are probably seeing what I am. Their interest income, where is it? Is it going to be hit in different ways? What is taking place? Trading is good. I saw Terry Duffy today on CNBC talking about the Merck just having come off of record volumes, which they're getting, and he was very aggressive against SVB and these other banks that don't know how to manage risk. And Terry, I don't agree with you on a lot of things, but I agree with you. They blew it. No uncertain terms. All your products and other derivatives are out there that they could have done. They weren't paying attention. When we go to the gas, I like this. Now, I think this was your last hurrah where you came down to see what was under there, and now this market's going to fight in this neighborhood of the 18 to 100-day average as we get ready for the spring months. We're already at the 22nd of March. Spring driving will happen, as I said, in 10 weeks or so. So I think the market's carving out a bottom. It has not, I can't say on this chart it's bottomed. You got lower highs, lower lows. If anything, the pros are probably selling it short here until you get through that high and you give it a reason where you can actually make a statement. Oh, you broke that pattern. Right now you're in a resistance pattern. In Tesla, bit of a pullback with today's action. The market is getting into the neighborhood of overbought. I consider any number over 70 overbought. It's had a nice rally, but I wouldn't be surprised that it wants to fight at the 18-day average of closes. In the financial select, I didn't see anything good to help anybody today with this. You have an embedded reading. If it weren't for this important day of these reports, I would have been selling this with an embedded reading. I was telling that to my subscribers this morning, and I said, I just not going to break my own trade rules, but certainly looks bad to me. And here you are down, what was the market down in dollars? 74 cents, but that's 2.3%. XLI, a bear market rally. The bias is still down, and you're on the verge of getting a bearish crossover where the 18-day average is going to get under the 100. That could add more pressure. Again, listen to what the Fed said. He is looking for an economic slowdown. Why do I want to own anything in the industrial sector? If they're looking for things to get slow, the banks aren't going to lend. They're going to tighten down. You want to expand, you can't. What's the consumer doing? You got to think this through, and that could be a problem for this market. In the home builders, we got up to the first resistance, just like I'm telling you in the other chart that we were looking at, the gasoline fund. You get up to that average. That's where the pros generally hit it the first time, and that's what you're doing. I would say that this market gets friendlier if, be it on Thursday or Friday, the highs of today are taken out. Then I look for a pop up to the upper Bollinger Band. But it's got to be on Thursday or Friday. It's an outside day. If you've taken my outside day course, you'd understand why I said that. In XLE on the energy market, you're oversold, you've hit downside, you found support against the Bollinger Band, and you just ran out of selling pressure down here. In GLD, well, the headwind is gone. One of the things that has been holding gold back is the Fed constantly raising interest rates and making it to the point where, hey, why do I need to own gold? I can get 5% on a 6-month T-bill. I can get 2 years locked in at that. I don't need to own the gold. Inflation, they're going to get it down, at least headline, under 5%. That's been the argument. But now if the Fed's getting ready to stop raising rates, and I walked away with that impression that we're closer to ending than before. They're counting on the bank tightness. Now, if the banks don't tighten, the Fed's wrong, and you're going to keep going up. So, if you looked at the dot plot, some of the outliers thought 5.9 is where you're going. Most are at 5.1, about where we were in last report, if you looked at the dot plot. In SLV, still bullish. As I said, silver got dramatically undervalued to gold, and it's been running. And in the copper, this is the first real resistance area. You've come off the Bollinger Band, almost to test at a 200-day average, up to the 18 and the 100, and it should get thrown back from there. And that's what the market is attempting to do. Last, TLT. So that's why I said, you'll say to yourself, why aren't interest rate futures breaking or this? Because the market's looking over this hike and going, is there going to be one more right now? I don't think, in fact, the Fed said, Mr. Powell, there will not be a rate cut this year. But we could sit there, and if the bank tightening happens, that acts as the cushion, and then they have the chance to see what's going on. In the back of his mind, he's nervous. How do you know that? Because he said very honestly, prior to the meeting, he was wondering, should they go on pause? So the banking system wears on you. You don't want to kill the patient. So they're watching, and that tells me that until we're through this hurdle of these banks, before the Fed gets very bold, they can use the banking system and say, the banks are going to tighten, and that's the equivalent of another hike. I think they might go in May. I think you can throw a coin in the air right now. They just did this one today as which way that would go. In the dollar index, I don't tell clients to sell under a Bollinger Band, and I wouldn't tell them to buy over one on the FXE. Let this correct, and that's where I think the interesting plays come in. Long the euro, short the dollar. That's where I think the ultimate play is going to be. Now, I'm going to cover in detail in the morning an awful lot. Why? We get the yin-yang impact. Think of this in timing. The Fed holds the meeting at 1 o'clock, or the announcement. At 1:30, the press conference starts. I'm giving you Chicago times. That lasts for another hour. Then Ms. Yellen came in and did her thing where she said there's no insurance for these banks. They're not giving blanket insurance, and it's up to Congress to decide if they want to ever raise the FDIC. And the word out of that at this point is absolutely not. At this point. If it gets much worse, things change with politicians. So how is Asia going to react to it? Because they're sleeping when that happens. You're 3 o'clock in our afternoon, believe me, they're sound asleep. At 3 here, in Europe, even 5-hour difference, you're 8 o'clock at night, there's not people in the offices. So it's got to go around, and we walk in the morning, and we see calm minds where we're at. We're going to get 2 more rate hikes, I think, tomorrow from other banks, but I think that's how you deal with it. I want you to join me in the morning. I'm going to start recording at 9 in the morning my videos with all kinds of trade ideas. There'll be a lot of them tomorrow. So how do you get it? Go up here. You'll see an icon. Give it a click. Free offers. You can see that you can join me with a couple of free offers there. Try it. I'm Ira Epstein. You have a great day. I'll see you tomorrow.